Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial. Let's talk about the exciting news when it comes to SoFi today, and let me help put that in perspective when it comes to the overall strategy of client acquisition and revenues for SoFi. But first, let's talk a little bit about the elephant in the room here and the fact that virtually everyone invested in SoFi has gotten crushed in the last 8 or 9 months or so, myself included. So let me start off by saying that I own a lot of shares. It's a giant portion of my portfolio. And I started buying somewhere in the 20s. I've been acquiring all the way down, but my average cost is probably something like 17.20. So I'm pretty far underwater at this point. Now, when I make a long-term commitment to a stock, this is not actually all that uncommon. I've been underwater for years on certain stocks that turned out to be giant winners in the long run. Tesla, of course, being one of the better examples of that, where I acquired it in 2011, I think November, I'm not really sure, of 2011 at around $33 a share. And I was underwater until March of 2013 with everyone and their mother telling me essentially that this company had no future and that I was crazy for investing in it at all. But just like SoFi, I think back then a lot of folks did not understand Tesla's entire strategy, even though they laid it out in Tesla's master plan part 1. That is also the case when it comes to SoFi. What a lot of folks don't realize is that when it comes to product development and client acquisition, a lot of these fintech companies are really playing checkers, and SoFi is not just playing chess, they're playing 3D chess and looking pretty far in the future at how things are developing. And this Technisys acquisition kind of fits into that overall strategy. And let's talk about that just for a moment. I am going to bring up a Yahoo News article here. Sofi Technologies announces agreement to acquire Technisys. So SoFi Technologies is acquiring, and they are a digital personal finance company today. They are not really a bank in terms of their app at this point, although that charter has been approved and that is coming. They're going to need a technology suite to manage their banking operations. So they're going to acquire Technisys. They are a leading cloud-native digital multi-product core banking platform, which is something that SoFi lacks at this point. Technisys shareholders are going to receive aggregate consideration of approximately 84 million shares of SoFi common stock, so less than 10% of SoFi's fully diluted share count as of September 30th, 2021, subject to customer adjustments set forth in the merger agreement. And these shares have an aggregate value of about $1.1 billion based on the volume weighted average price of SoFi common stock. Okay, now, this means there's not going to be a lot of cash trading hands here. They're going to be getting shares in SoFi for this, which means that it's not going to affect the balance sheet that much. So Technisys has built an attractive, fast growth business with a unique and critical strategic technology that all leading financial services companies will need in order to keep pace with digital innovation. The acquisition of Technisys is an essential building block in delivering on our member-centric digital one-stop shop for experience for SoFi members and our partners through Galileo, our provider of fintech cloud services. This is a quote from Anthony Noto, CEO of SoFi. Technisys, according to them, has emerged as a proven leader in Gen 3 multi-product banking core technologies. We're excited to bring their technology offering under the SoFi Technologies umbrella and to deliver it to hundreds of millions of customers worldwide. Now, what a lot of folks fail to realize about SoFi's platform and SoFi's revenue model is their revenue model is not just about acquiring more clients under SoFi's app, but it's also delivering technology solutions to other companies that want to engage in the fintech space and want to enter the banking world or the world of digital banking and everything that goes along with that. Now, they lack some core technology pieces that Technisys is going to fill here. And let's talk a little bit about Technisys because it's a company that I wasn't really all that familiar with before this announcement, but I've done a little bit of looking in them. And today, Technisys has a presence in 16 countries. They're a top flight team with more than 800 digital banking experts worldwide. Provides cyberbank, digital banking, and core platforms to over 50 customers, including Relevante, Tabbank, US Brightside, ATB in Canada, and the award-winning Banco Original in Brazil. Banco Original is probably the biggest deal that they've worked so far. There's a case study on their website about them. And I think actually it's a very interesting technology and a very interesting study. They were the first fully digital bank in all of Latin America, Banco Original, and they use this platform. The company has grown dramatically in recent years, receiving $50 million round of funding in 2019 from Riverwood Capital, which is a very famous Silicon Valley venture capital firm, demonstrating support for the globalization of a disruptive and winning technology. They are recognized as a leading digital banking platform, and now they have been acquired by SoFi. Okay, so the model has always been for software and technology services to fill in about 1/3 of the revenues for SoFi. They're attacking the fintech space, not just in let's get customers for our digital platform, which is great. The most valuable relationships they're forming right now are folks who are what they call high net worth, not well served. Those are folks making over $100,000 a year or so, but who have not really acquired wealth. Traditional banks tend to deal with folks who already have large deposits, and they ignore high-income earners who don't have a lot of deposit at this point. SoFi is looking at that client acquisition angle a little bit differently. They're acquiring these folks as clients when they're quite a bit younger. They're high earners, but they haven't acquired wealth. By the time they acquire wealth and they have advanced banking and lending needs, they've already been with SoFi for years. And at least that's the strategy going forward. And it is working. They are growing and growing and growing. This is a company that has a revenue growth story. All of the negative price action in the last 8 months or so has not been because of any company specific, negative SoFi news. It's all been about macroeconomics, interest rates, and things that they can't really control. In terms of what they can control, they are doing everything right, and their revenue is still growing. This is going to fill in another one of those pieces. Now, their software and technology services so far have not really provided a ton in a lot of revenue, and that is starting to change, especially with this acquisition of Technisys. Now, it's going to take a few quarters before we start to see that filter in, of course, but between the bridging services of Galileo Technologies, between the banking services of digital banking, essentially anyone who wants to jump into the fintech space, who wants to be involved in banking, lending, or trading of assets, is going to be able to do that using SoFi software right now. There is no need necessarily to reinvent the wheel. So number one, SoFi is going to be getting a slice of revenue based on the fees that they charge for these services. This also makes people who are using SoFi's platform as their technology base pretty attractive acquisition options for SoFi itself later on down the road, as there's no cost to integrate, meaning they're going to be buying other digital banks going forward as there is who use their software suite, as there is no cost to integrate technologies. They're going to be using it moving forward. So do I see this as a positive? I really, really see this as a positive. SoFi now has the ability to plan acquisitions of future customer bases 5, 10, 15 years down the road because these folks signed up for their software suite. It's going to take a while for this strategy to see fruition here. I cannot recommend that anyone go out and buy, sell, or hold a security via YouTube. That's simply not allowed by regulation. But I will be acquiring SoFi at these prices, and I'm going to continue to do it. And I can't acquire it in the volumes that I was doing it, just a few months ago, because I'm seeing my income being impacted right now by what's going on in the economy. But whenever I have funds available, I will be adding SoFi. There's a lot of stocks right now that I'm not necessarily adding as well that might be a surprise to you. We can talk about that sometime as well. Anyway, folks, tell me if you are not as excited about this acquisition as I am. Tell me if you don't understand how this fits into SoFi's overall flywheel strategy when it comes to attracting a client base and building up that 1/3 of their revenue portfolio in software and technology services. I'd love to hear from you guys in the comments below. And if you like this video, please like, subscribe. Thank you very much, and have a nice day.